Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Paul Lynch. He's the founder and CEO of Vitarly. We're going to take a look at transaction cost analysis and why it matters. Paul, it's great to have you. Welcome to the Nasdaq. And let's learn more about this TCA. Why does it matter with regulations increasing, particularly in Europe? And of course, market structure has changed so much with electronification.
Absolutely. The implementation of MiFID II in Europe was quite a shock to the industry. TCA has been very familiar with equity participants over the years, but what happened with MiFID II was that other asset classes were brought into this jurisdiction. So banks and brokers in Europe now have a fiduciary duty to prove best execution, and typically they do this on a quarterly basis. Now, the first wave of ripples from MiFID II we've seen came into listed derivatives, and for example, a bond portfolio trader now in Frankfurt, they may be trading German bonds, Italian bonds, but also US Treasuries. And because of this, they receive analytics on the European side, but even though the US Treasuries are not actually in the EU, they still expect the service. So we've seen transaction cost analysis create a wave into other asset classes and regions globally.
All right, now who should be concerned? What players within the capital market space need to worry about TCA?
Well, there's many stakeholders involved. First of all, it's an essential ingredient for the buy side. They need to reduce execution costs, and by doing the reduction in execution costs, they can boost the underlying fund performance. On the sell side, it's a good advert. At the end of the quarter, the sell side sales traders can go to their clients and say, this is what we've achieved this quarter, pay us more. But also at the top, there's compliance. So the compliance can actually reconcile the execution process that the trading floor has done and make sure it's consistent with the message they put out in their reporting when they're pitching for buy-side mandates.
Is it more challenging for the buy side or the sell side, or equal?
It's a relationship between both, really. And the key to it is having clean data in and getting a consistent result out. But there's also a debate as to, for the sell side, should they be doing it themselves? In essence, should they be marking their own homework? So this is a hot debate that goes on continually throughout the industry at the moment.
Do US asset managers have to focus on this as well? Because even though MiFID II is exclusive to Europe, if you're doing business globally, you're still going to have to adhere to those rules.
Yeah, well, we don't see it really as being something you have to do because of regulation. It's best practices that you would seek to find out what's going on with your execution process anyway. So any good fund manager will be looking to squeeze as much as possible out of the execution process to boost the underlying funds. So any decent asset manager, whether it's in Tokyo or New York, Chicago, they should take a keen interest in this anyway.
So transaction cost analysis, it sounds to me that there's more positives than negatives. I mean, there's always going to be that operational ups and downs you have to go through, but it sounds positive to me.
Absolutely. We see it as a huge efficiency boost for the industry. As an example, at the end of the quarter, the buy side can see who's performed well and who's not performed well. The brokers who give superior execution performance get rewarded with more commissions, at least in theory.
Right.
And the ones who haven't will face a shortfall in revenues in the next quarter and going forward. But the other parts that it brings to the industry is accountability. With the transparency, you get accountability. With accountability, you get trust. And when you have trust, you can grow confidence. And that's always welcome in financial markets.
Okay, Paul, thank you so much for joining us
Thank you
on the
very
market
much.
site. And thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.